Scott Gecas is here with us. He's with Walsh Trading, and he's in Chicago. What about these weekly export sales numbers this morning? Was there anything in here really to help any of these markets over in the grains?
Well, I mean, when they came out this morning, we were a little bit higher. After they came out, the market completely had a little bit of follow through in the bean market. The bean market gave away about 5 positive days with stronger than usual volume over those last 5 days yesterday. So we had a little bit of a follow through today. We broke that 860 level in the front month, traded all the way down to around 850, 856 or so. So what that tells me, though, is earlier you were saying that the funds are pretty much on the sidelines. So if the funds were active, and once we broke that 860 level, you would have seen a little bit more spike in volume. But because of everybody's on the sidelines, you didn't really see that big spike in volume. It's just right now drifting all the way back to unchanged or so. So there's a lot of money on the sidelines right now, but with everything that's going in play, with the weather being non-threatening, part of the move in the beans yesterday was due to FC Stone raising yields. So with the yields being raised a little bit, that's put a lot of pressure on the downside market. Now, what also sparks my interest in all of this is there is absolutely no option volume. The open interest does favor the puts slightly, but as far as open interest, you're not seeing those normal levels, the 7,000 open interest, 10,000 open interest. Right now, you're only seeing about 4,600, 4,000. So there's really a lot of money on the sidelines. There's not a lot of positioning, but with the trend being down across the board with all the grains, it's going to take some event to get some positive tone.
So, Scott, in your opinion, what would it take to bring that money off of the sideline? Would it be either a softening in the financial market, concerns in the financial market, concerns about weather or what this crop is going to do at the end of the year, or is there trade? What would start that process?
Well, number one, you're going to have to worry about the trade war talks. That's definitely taken full focus until we get some type of direction out of there, whether a deal is done or no deal at all. There's going to be a lot of money on the sidelines. Everybody's been getting hurt with these headlines, a lot of volatility, big, violent swings. So a lot of people are on the sidelines not willing to take that risk for one way or the other because these markets can turn on a dime with any tweet, any headline, and that's the reason why you're seeing a little bit lower volume.
All right. You mentioned what goes on with the dollar. Let's look at the U.S. dollar and see where it's trending at because we had kind of a big pullback earlier in the week. Right now, we're down 120 points at 98.220 on the December, down an even 100. Scott, we'll be back in just a moment. Stay with us. We've got more coming up here on the Market Day Report. Scott Gecas is here with us with Walsh Trading. Scott, going through all of these numbers here and where some of this product went, 1,400 metric ton of pork headed for China. Now, was the trade, A, watching for something like this, and B, how much of a big deal is that?
Well, here's the thing with the pork. I mean, it's very confusing to a lot of different people. So if you look at the pork numbers, everyone was waiting for all these exports to show up. They weren't willing to, buy pork until all these exports show up. Now you have China having record pork imports. Now you also have Mexico ramping up their imports as well, but yet the market's not reacting to those positive news. So it's a very odd, confusing market. So with all that being said, it could be just a little bit of a drag on pork prices just with the Chinese trade war talks. But even still, with China importing those record levels of pork, even with these high tariffs, you would have thought that you would have seen a little bit of bump up in price, which we have not gotten. So it's a little bit confusing. But again, the volume is light. Option volume is almost non-existent. You're only seeing maybe 20 contracts here, 20 contracts there. It's very light across the board. As far as the cattle prices, you're seeing a lot of pressure just because of the cash trade. Cash trade roughly around 100 to 103, definitely adding a little bit of pressure to the cattle prices.
Should cattle not technically but fundamentally be at these levels then at this point, if we consider what's going on with trade and we consider what's going on with this export sales numbers and considering where we stand with getting this Tyson plant back online?
Well, that's the thing. So the pricing plant, or the packing plant in Kansas that was shut down, the slaughter rate has been absorbed by the other plants. So that doesn't really make a lot of sense when you're looking at that, but that's why I'm saying it's definitely being driven lower by the cash cattle trade. So the slaughter rate has been absorbed by the other packing plants, but we're just not seeing that bump up in price. So we have to wait and see. But again, it's strictly based on that cash price as well as a very light volume.
Okay, Scott, hope you have a good afternoon and a good weekend. Scott Gecas, Walsh Trading, there at the edge of the trading floor.